Hey everybody, welcome back to the channel, and if you're new here, thank you so much for tuning in. My name is Austin Shipton, a local realtor here in the Gulf Coast, and I'm here today with Cody Wood, and we are going to be going over mortgages and all kinds of stuff. Cody, you want to introduce yourself?
Yeah, absolutely. I'm Cody Wood. I'm with Green River Capital. I'm a mortgage broker. I've been in the business for about 10 years or so and serving the Pensacola area and surrounding areas.
Awesome, thank you. What brought you into mortgages?
Kind of fell into it during college, basically. I worked in a call center and did not like it very much. So in order to get out of that, I had a friend that got me into mortgage and kind of loved it at that point. I like numbers and I like people and kind of mix of both of them. So just been in it for about 10 years now and I'm enjoying it.
Awesome, thank you so much. And today we're actually going to be going over the mortgage process, different types of loans, and everything like that. And that's why Cody is here today to help us with that information. The first step when shopping for a home is to find your budget. And to find your budget, you need to talk to a mortgage broker or a loan officer like Cody Woods over here.
Yeah, when you're looking around, every situation is going to be different. So each person is going to have an individual type of characteristic to what loan they're looking for. So there's going to be different loan products, different situations that's going to fit different people and what they're looking for. For instance, there's conventional loans, there's FHA loans, there's VA loans, among many other ones at that time. And your background and your income or assets or whatever it may be kind of characterize which one of those you would fall into in that current moment. For instance, if you're most of the time, conventional loan is going to be what people fall into, given if they have good credit, good assets, and W-2 job or whatever it may be. It's just kind of what happens for the most part. Whereas people that have lower credit or need to bring less down, or maybe buying a multifamily house and living in one of those, they'll move into more of the FHA range because you can bring 3.5% down on those properties and still get a really good interest rate if your credit score is down to 580 or whatever it may be at that time. Whereas VA loan, obviously in this area, they're very popular, being as we have 3 or 4 different bases around this area. Whereas those are great because you can do 100% financing. You're not having to bring a down payment. A lot of people don't know you can actually buy multiple VA homes without having to sell them off beforehand.
Well, I actually didn't know that myself. I thought you had to close the other loan beforehand.
100%. Yeah, there's something called VA entitlement, and you have so much of it each time you do use it. Now it will be used up, but there's certain calculations that are really technical by people a lot smarter than me. But you're able to do multiple finance house at one time. Now it's probably going to be 2 or 3 at the most. Depending on the purchase price you're looking at.
I got you.
Yeah, but those obviously 100% financing. They come with great rates, and they're really popular in this area. And obviously we have to do a lot of those in order to kind of stay in business.
Now, when you're speaking of these conventional VA, FHA loans, do the interest rates vary too much between them, or is there one that's the best with the lowest interest rate, or what would you say?
Yes and no. So it's going to depend a lot on your credit score, how much you're putting down. It's going to depend on obviously the purchase price of the home, because there's a loan limit for all these loans as well.
I got you.
Whereas a conventional loan, the regular loan limit goes up to $800,000. It just got changed recently, or around $800,000. The exact number is a little different.
That's conventional?
For conventional, correct. Anything above that considered jumbo requires 20% down. So it's a different product, and the rate does change during that. Whereas FHA, it's going to depend on your interest rate, your credit score and your down payment as well, but it's less dependent on what your credit score actually is. That's why it's a better product for a lot of people that are, just starting out or don't have great credit or maybe rebuilding credit, because it's a little more lenient on that. VA is similar process. They're considered government loans, so they're going to be a little more willing to go towards, the 580 credit scores or even lower in some cases with 100% financing without really killing the interest rate that you're working on.
Correct. Oh, that's awesome. Because I know FHA loans, if you have a lower, like a 590 credit score, you're probably going to have a higher rate there.
Correct.
But with the VA loan, that's not the case all the time?
VA and FHA actually. So it will increase, to be transparent, but it won't increase in the same rate that a conventional loan does. Because they are very dependent on credit score and your total, how much you're putting down and everything else. Whereas FHA and VA and USDA for that matter are going to be government-backed loans. So they're a little more of a solid investment for investors, so they can go into it without raising the interest rate way too much during that time.
So Cody, a buyer messages me. They're like, "Hey, I want to look at this house. It costs 500,000." The first thing I ask is, "Do you know your budget?" So how does a home buyer find their budget when they're buying a home?
Talk to me.
Basically.
Yeah,
Okay.
so we'll have an initial conversation, just kind of seeing what the situation is. Is your primary residence? Do you own another home already? Are you going to be moving to the area, or are you already here? Just a kind of few different things that outline what may fit best for them. And at that time, you'll go through a pre-approval process, which just means you're going to put an application in. We're going to look at your credit history, we're going to look at your income, we're going to look at your assets, and just kind of go through and see what fits best for you during that time. So we're really big on not approving you just how much you can get approved for. We want to make sure it fits within your overall monthly budget, because there's no reason to buy a home just to not be able to leave that home. You want to be able to go out and still do the things you like, given the budget that you have. So we'll go through that with you. We look at the property taxes, the insurance that are in there as well, and see which loan type fits you best, which is, the FHA, conventional VAs, and so forth. So we'll go through that process. We will have to double check your income and assets. So we'll look at bank statements, pay stubs, W-2s, tax returns, possibly, stuff like that, depending on what loan type we're going with, just to make sure that you are pre-approved, because once we give you that letter, that means that if you give that to a realtor, you're fully qualified. Meaning if you get under contract with that house, you will close, barring something else happening with the transaction, such as the home appraisal or something like that. But you are qualified to get lended on, basically.
Awesome. So the pre-approval will pretty much show you how much you're approved for. And then you want to make sure that you can afford those payments, which is what Cody's going to help you do there. And then we can go ahead and start looking for homes that are within your budget. So that's how we come up with the budget there. Now, when you have this pre-approval, is there any fees when you're going to get the pre-approval? And then how long is that pre-approval good for?
Yeah, good question. No fees at all. You can call me. Everything's free from that point on. You have the approval from the time that we pull your initial credit, 120 days. So as long as you close within 120 days, you're good to go. It's not the end of the world if you don't. It's just we have to update your credit report and then a few of your documents during that time. But no, there's no cost up front. There's nothing of that nature that you have to.
So you don't have to pay for like a credit check or anything like that?
Not at all. Not
Awesome.
at all. So we cover all that cost.
Because I know some lenders do charge for that credit check.
Yes.
I know a few that do actually.
There's they've increased them lately, so that was a conversation that was had, but no, I mean it's kind of hard to get people to apply if you're charging them a few $100s to do so.
Yeah. Now that y'all know the different types of loans and your options out there, they do change for everybody based on your circumstances. But Cody took 3 homes here, one for $200K, one for $350K, and one for $500K, and he's just gonna kind of explain, the different costs that comes along with that, like your down payment and your monthly payment. So Cody, if you want to go ahead and take over there.
Yeah, absolutely. On this, we just wanted to outline a few different loan types. So for conventional with a $200,000 loan, a big misconception, which kind of talked about off camera a little bit, is that you have to have 20% down in order to buy a home. That's incorrect, even for conventional. A lot of lenders, including ourselves, have a 0% down conventional loan that you can qualify for. So you're bringing nothing down for a down payment, and then you can bring as much as 20% down.
That's great, because usually, VA's the only ones that can do that. So that's awesome.
Yeah, it's cool. There's a lot of weird stuff out there, which is great. Which you have to
I should work with a mortgage broker.
But yeah, you can do as much little 0% down or 3% or 5%. It depends. And it won't change your loan way too much. That one has a payment around $1,550 a month if you put 0% down. And that's going to be, your mortgage is going to include your property taxes, your insurance, your principal, interest, and everything else in between, basically. Oh, wow. So that'll be in total what you pay to a mortgage company.
And this is for $200,000 with 0% down. It would be $1,550 a month, which I think is pretty good, because $200,000 could get you a pretty decent 3-bed, 2-bath, around 1,100 square foot in this area.
Absolutely.
And I mean, that's how much people are renting for. And what's that all include? The $1,550?
That's going to be your principal, interest, taxes, and insurance.
Principal, interest, taxes, and insurance. Awesome. Yeah, very affordable. 0% down. All you would have to worry about is your closing costs. How much do you think those would be on around $200,000?
We estimate 3.5% each time, but it really just depends. I mean, the large portion of that is going to be what's called escrows, which just means you have to pay for a portion of your property taxes and your insurance up front. So they make up a big piece of that that cash you bring to close, basically.
I got you. Awesome. Good to know. All right, let's move on to the next one.
So for all of these, you can use conventional FHA or VA on any of these scenarios. We just didn't want to throw 1,000 different numbers at you. So based on the FHA one we use for the $350,000, you bring 3.5%, which is the down payment for FHA, which in this case comes out to around $12,250, and your monthly payment with everything all in again is around $2,400.
$2,400. All right, and $12,250 would be the down payment. That's 3.5% of that, and then what do you think closing? You said 3.5% on closing cost as well.
Give or take, yeah. We throw an estimate. If we see your contract and we see what property you're looking at, we can give a much better estimate at that time. But we always like to overestimate and kind of work backwards rather than give kind of a false assumption or a model that we can't get to.
All right, so that pretty much tells me that if you're looking to have a $350,000 home, if that's what you're looking to purchase, that you should have around $20,000 unless you plan on asking the seller for concessions to cover your closing costs.
Correct.
However, they can't cover your down payment, so you're gonna need that. Unfortunately,
Sometimes, but that's a different scenario.
Oh wait, explain that.
There's different things. Like if you're buying from a family member, I'm doing a couple right now. We're doing something called a gift of equity, which just means like the seller is actually gifting them money from the sale of their home in order to cover their down payment, closing costs, and everything else. So there's always weird scenarios that go into it, but typically, yes, rule of thumb, they don't cover your down payment. Yeah,
I learn something new every day, y'all, and y'all just learned a lot too, hopefully.
Yeah.
So we'll go on over to VA now. If you want to go ahead and break down the VA loans for the viewers out here, that'd be great.
Yeah, VA, awesome. My favorite loan, honestly. So up to $500,000, there was something called the Blue Water Initiative that was done, I want to say like in 2021 or something. Don't quote me exactly. But basically what it means is if you have your full entitlement, whether you've never used VA before or you've used it and sold that home or whatever it may be, there's technically no limit on a VA loan. There used to be a loan limit based off the county where you couldn't go past a certain amount. Right. So now, I mean, if you wanted to buy a $2 million property, you could do it with 100% financing as long as you qualify for that and everything. So $500,000 down. $500,000 purchase price. You can do zero down. The monthly payment comes to around $3,200 on that one. That's again all in property taxes, insurance, and the payment for the home itself.
For a $500,000 home, that's pretty good, $3,200 a month, and that's because I feel like the interest rates have been coming down, right?
Yeah, we're seeing a good trend. They were super high at the beginning of 2022 and through that 2023 time frame. We were expecting them to come down sooner, which they did, but they are coming down now. We're the lowest that we've been in a couple of years at this point.
Yeah, it's better late than never, right?
Yeah, absolutely.
So awesome. We went over all these loan types, and then as far as the cost of this, could we talk a little bit about surveys and inspections and stuff like that homeowners have to buy?
Yeah, absolutely.
So I know the survey is done through my end. I tell the clients to work on getting a survey as well, unless there was already one done. So they need a survey, 4-point, a wind mitigation test, and a home inspection, which usually costs around $400 for everything like that. And then the appraisal, right? For that, I got you. Do you want to go over that?
Yeah, appraisal is the only thing that we charge to the client up front. So basically, after you're getting all your loan products and you're happy with what you're seeing, and you get a contract and you're moving forward, we have to order the appraisal. We'll typically charge the borrower for the appraisal because, we have to pay the appraiser to do their job. Yeah. And then they'll come back with a value. So let's say you're buying the FHA home at $350,000. We want to see an appraisal that comes in at $350,000. So basically supporting the purchase price in that time. And all it is, it's not the same thing as an inspection. A lot of people get those confused. Appraisal will just go in just to give a value of the property. They're not digging through the house with a fine-tooth comb to find out and make sure everything's perfect, basically, in that sense. Yeah.
Awesome. Well, and that's why you want to work with a broker so that he can help you, through this whole process here, and a realtor as well when you're buying a home. If that appraisal doesn't come back, what I do for my clients is I do an appraisal contingency on the contract, and it's an extra form that I fill out, and it protects the buyers. If the appraisal comes in too low, they can still get out with their earnest money.
Yeah.
So, there's multiple reasons to work with professionals when buying a home, whether it's a lender or a real estate agent. It's just going to help you out, and it's going to save you money in the long run, and it's going to save you a headache.
I've done a lot of, they're called FSBOs, for sale by owners. Every single time they come to me at the end and tell me they wish they would work with a realtor. It's a headache. There's a lot of work. It's more than just opening doors and getting a paycheck for it. There's a lot that goes in behind the scenes for that. Yeah.
Thank you so much for tuning in and giving us your time today. Please like and subscribe. Follow for more videos to stay current on real estate and the Gulf Coast market. And thank you, Cody, so much for coming in today. If you want to go ahead and say goodbye to everybody, I appreciate that.
Thanks again, guys, for having me. I appreciate you having me on as well. My information will be below if you want to ask me any questions. You don't have to necessarily be in the middle of a contract or anything. I'm happy just to kind of answer anything. Also, during the process, please remember this. When you're buying a home, don't go out and buy new furniture for it. Don't go out and buy a new car. Don't go out and open new lines of credit. Keep the situation the exact same throughout that process as much as you can until after closing, and then go crazy.
Awesome. Thank you so much, Cody. Like and subscribe. You can call Cody here, 850-358-6205. His info will be down below, and then my info is all over my YouTube page. Thank you again, y'all. Have a great day.
Bye, guys.